Welcome back. In international news, higher energy prices casted a shadow on Wall Street as crude oil closed just shy of $100 a barrel in New York. That's the highest close since September 2008. This comes on the back of an official word on how swift the price at the pump has risen. The U.S. Energy Department says gasoline prices spiked to $3.38 a gallon in the biggest jump since Hurricane Katrina disrupted supplies in 2005. Investors are worried high energy costs will derail the economic recovery by diverting consumer dollars away from shopping. Federal Reserve Chairman Ben Bernanke told lawmakers the impact of the recent spike in energy prices should be mild, should the surge be short-lived. But it was higher oil prices which guided Wall Street sentiment, sending stocks sharply lower across the board.
Currently, the cost pressures from higher commodity prices are also being offset by the stability in unit labor costs. Thus, the most likely outcome is that the recent rise in commodity prices will lead to, at most, a temporary and relatively modest increase in U.S. consumer price inflation, an outlook consistent with the projections of both FOMC participants and most private forecasters. That said, sustained rises in the prices of oil or other commodities would represent a threat both to economic growth and to overall price stability, particularly if they were to cause inflation expectations to become less well-anchored.
Yahoo is in advanced talks to exit its joint venture in Japan with SoftBank. Also, a deal to transfer its 35% stake in Yahoo Japan could come within a few weeks. People with knowledge of the discussion said a straightforward sale of SoftBank is unlikely for tax reasons, and the parties are exploring other possibilities. The public value of the stake is just under $7.5 billion. Both SoftBank and Yahoo declined to comment. Shares of Yahoo Japan rose 8% and SoftBank shares fell as much as 4% in Japan today. Talks come as Yahoo chief executive Carol Bartz is under pressure to turn around the once mighty internet company that has fallen behind in prominence and growth compared to Google and Facebook. U.S. car sales were up more than 20% in February this year as consumers came back to showrooms despite higher fuel prices. Manufacturers say automakers continue to gain traction in the economic recovery. General Motors was the exemption in terms of incentives, boosting them to lure in shoppers, leading to a 46% surge in sales, while Ford sales jumped 14%, with car makers stating it is now a matter of boosting production to keep up with demand. The industry is on track for its highest sales rate since August of 2009, when the government Cash for Clunkers program gave the industry a short-lived boom. And while there is concern higher prices at the gas pump could be a speed bump to automakers, analysts see an upside.
We're getting this with less incentives, better pricing, higher transactions prices. The mix of vehicles is better. The people are buying the top end of the line as opposed to the entry model.
Market analysts welcome the annual budget tabled by Indian Finance Minister Pranab Mukherjee. A day after the Finance Minister tabled the annual budget in Parliament, the market spiked by over 600 points to take the Sensex to close at 18,446 points. That's a plus of 3.5%. Indian shares ended sharply higher as traders covered their short positions and as a strong growth outlook for Asia's third largest economy boosted the sentiment. Noticing the cheered market after the announcement of the annual budget, analysts said that the Sensex had shot up over 600 points, which marks the start of a good outlook for the Indian market. They added that the budget did not raise any amount of tax and that the country's economy is set for 9% GDP growth this year. And before we head back to news, we will run you through the Asian equity markets, the price of oil, followed by metals and a selection of currencies. After the break, Lord Buckwell is back with the news.